Hello, and welcome to the next module of QuickBooks in the Real World. In this demonstration, we'll be using the QuickBooks Online software, but we'll be performing very similar tasks that we did when we worked in the QuickBooks desktop software. This is Marie Gibson with Gibson and Associates, and I'm glad that you've joined me with me today. And we're going to be taking a look at Craig's landscaping. We're going to be spending all of Craig's money. We spent Larry's money in the desktop version. These are our sample companies, and it's nice to be able to use them so I can show you how the tools work. And again, this is not a class in punch and poke and the technical aspects of how the tools work, because there's a lot of YouTube videos sharing that knowledge. This is more of what happens behind the scenes, and when we make those transactions, how do they show up in our reports? Why are they're there? How do we think about this? How does the software think? What's the logic behind it? And so when we learn to use the software better, our stories are better, our reports are better. I can actually read those reports and use those numbers to make my decisions. So that's what this class, this module, this program is all about. And again, in here, we're going to be spending all of Craig's money, and we can do that first off, and you can see my screen up there, but we want to be able to just go spend his money. So there's a button here that's called New, and I can create a check. And this check is going to look very similar to the checks that we create in the desktop version, right? So I've talked before in our modules, excuse me, turn that off. Was junk mail. So we have talked in the previous two modules about every transaction that we make in QuickBooks is tracking our money coming in and our money going out. And we use these forms and the tools in QuickBooks to get them to land on the reports properly. And that the chart of the accounts is the hub. It's the traffic cop that tells us where these transactions are going to land. So in this case, I have a check, and let's just say Marie Gibson. Marie Gibson's not in here, right? And so we would add her, we'd add her as a new vendor. And again, we can add some details with her address, her phone number, full tabs we'll take a look at later. The money will be coming out of the checking account. I can also have it coming out of savings. And then what am I going to be selling? Actually, what am I going to be buying? This is, we're paying Marie Gibson, right? So we have to remember which form we're on, which transaction we're making. So let's see what we're buying. And let's say from Marie Gibson, we buy consulting fees. And consulting fees are not in there. Those would be my chart of accounts, the little drop down arrow, the triangle. This is my chart of accounts. It gives me access, just like in the desktop version, I have access completely to my chart of accounts here. I'm going to add consulting, right? And when it comes up automatically, it's an expense type. We talked about types. There's 5 major types in, not just in QuickBooks, but in all software. That's assets, liabilities, equity, income, and expenses. And of course, all the softwares give us a few more specialty types as well, but the 5 major ones are our biggies. And so this expense is, I can actually give it a detail type, and it's consulting. And I can give a full description if I like, and save and close. And then I can say what this is for. This is for the consulting work, blah, 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 that I've done to review your QuickBooks Online file, right? A lot of review going on. And let's say that it was for $500. And I know some of you are already saying, wait, you've made it for too much, right? So the question is if this gets printed or not, and if it's to be printed or if it's printed, there's a little number right here, print later or print now. I can actually give it a check number. Perhaps we hand wrote it, right? We can print later, and there's a Q. Let's just start with check number 71, and I can do save and close or save and new. And then when I move to the next check, let's say Books by Bessie. And in this case, legal and professional, she's our bookkeeper, and we paid this young lady $55. Okay, so again, just writing some checks. Now, people sometimes ask me, what if I don't write a check? What if I do an EFT? An EFT is electronic funds transfer, or ACH, which is automatic clearinghouse, right? So a debit card type of transaction where there's not a piece of paper, there's not a check involved, or it's an e-check, an electronic check. There's different terms for those. And so we can actually make those, let's say that here, gas and oil, and let's say that this is a debit card. It's just coming out of my debit card, maintenance and repairs, gas and oil, or a fuel, let's just say that's an oil change. Rotate tires, blah, 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 right? We're not sure what it is, but we're making this up as we go along. And we can save a new. And sometimes people do seem to make things up as they go along. But what we want to be clear is that our expenses going in and our expenses coming out are tracked properly. So here looks like maybe there's some rent. And let's see if Craig has rent or lease. Sure he does. And it's $1,000 for this particular check. So now I save and close. As we learned when we're mapping and we're using the chart of accounts, I actually will find those numbers, those entries in my profit and loss report. They're not going to be an income because they're actually expenses. And so they're not in my cost of goods sold either. We'll talk about cost of goods sold at another time. And I can actually see that the accounting would be $640, the little bit to the bookkeeper. There should be some rent or lease. Let's see how come it says 900. Now, when I look at that, and again, remember there's no Z for zooming as there is in another version of the software, but I can see here that there's a bill and a check both. And this is what happens sometimes when we get a bill entered and we don't use a bill payment to pay that. Perhaps that really should have been $1,000. So one of the challenges with QuickBooks is when we start paying things and we don't have the money to pay them right now, we want to convert those to a payable. And so we have a payable report. Accounts payable aging summary is a list of all the companies, all the suppliers, all the vendors that I owe money to, right? Their debts. So you can see here the insurance company, Diego's, Norton's, PG&E, Robertson's and Associates. As of this day, I have these debts, okay? So when I'm looking at that and I go back and I say, oops, I wanted to step sideways over here to my P&L report. This P&L report, I'd like to take a look at this bill. And it says this bill was actually for October and the payment has been made through bill payment. So that's an option when we are creating and paying our vendors and suppliers, is we can enter them as a bill with a bill payment, or we can enter them with a check. So let's take a look at what a bill looks like. Enter a bill. This means that I'm going to pay it in the future, right? And again, I have a report. So let's say computers by Jenny, and the bill, it's computer repairs. And let's say it was $800. Thank you for our little messages. Lots of messages in QuickBooks, right? And it's going to be billable or not billable. And again, this feature allows me to say that this was for a specific customer. This is for Amy's Bird Sanctuary. Well, it may or may not be in this case, but this allows me to have a queue, a list of all these billable items, so that when I go to create an invoice for Amy, when I go to collect money from Amy, there's a list of all the things that I bought on her behalf. In this case, it doesn't make any sense, so we'll go ahead and delete that. It's a nice feature in the software though. And so when I'm paying this, I'm paying computer, or I'm making a bill, I'm creating a bill for computer repairs, $800, and I can save that. And when I save it, it's going to show up in a couple of different places. It will show up under my accounts payable aging summary. And you can notice that I have several browsers open. I can have multiple browsers open with multiple reports so that I can flip back and forth between them. It's a really nice feature of using the multiple browsers. And here on my payables is an $800 bill for Jenny. Okay. In addition to that, that bill will show up in our vendor list under her name. Let's see where she is. It's computers by Jenny. I must have just there we go. Oops, scrolling a little too fast. So computers by Jenny, when I'm actually looking at computers by Jenny, I'm able to see her transactions. And in this case, we have a bill, and maintenance and repair is where that's posted for computer repairs. And it's $800, and I can mark it as paid. I can view it, edit it, I can copy it, or I can delete it. So if I mark it as paid, what it's saying is, well, how did you pay it? I need to know, did the money come from the bank? Was it paid by a credit card? And so in this case, I'd say, no, I just wrote a check for it, right? I did a bill payment through the check. Maybe it was, again, we can call it an EFT, an automatic transfer, but we're paying this bill for $800. And we could save and close, or save and new. And so if I save and new, I might have other people that I'd like to pay. Let's go back to our payables report, and let's pay our insurance agent, Brosnahan, it looks like. So when I click on Brosnahan, I can add this bill and pay it. And maybe this time, instead of paying it out of the checking account, I do pay it out of a Visa or MasterCard. And so once I pay that, I say, hey, here's my Visa card. I'm not going to get a check written to you. Would you just go ahead and pay it? Sure, that happens. And we can save and close. So now Jenny has this bill and a bill payment, which completes that formal transaction. So we enter a bill and pay a bill. Sometimes people enter a bill and try to write a check. This software will give you a message that says that's not a cool idea. Okay. So when we're here, let's go back. We saved it. Let's save and close. And it says, you and Craig are working on this at the same time. Your work was not saved. Well, I think, I don't think so. I have a companion named Craig Carlson that's actually working at this on the same time. I mean, we may end up with two of those in there, right? So we are looking at writing checks or using automatic clearinghouse or EFTs or debit card. We looked at the fact that we can enter a bill and then pay a bill, right? All ways of spending money. People sometimes use an expense. An expense looks very similar in this very similar picture, right? And it works very similar. There's no way to add a check number. So this would tend to be something if you were, let's say we went to Robertson's and Associates and I paid my MasterCard. Robertson's has a bill. We can add that and we can pay that, or we can disconnect that and we can say, no, actually it was not for that bill. It was for something else. It was for legal fees, legal and professional. They're an attorney. And let's say that's $1,200. Oops, once again, when I get the wrong numbers, and if I had saved and closed and didn't notice it, let's save and close. Where do those numbers show up? Remember, it's a story that we're telling. And so we're going to come to our profit and loss report. And as I'm looking at the very bottom line, I think, whoa, I didn't lose $17,000 this month. What happened? And I scroll up and I can see, oh, no, I didn't, there's no $12,000 there. So I pop that open and I say, oh, I see what happened, not 12,000, 1,200. So I try to encourage people that when you make a mistake, it's not the end of the world. It's easy to fix. You find the mistake, you click on it, and you correct it to the way that it should have been. And now we can see that these are the charges that I've had for legal fees during this year, back to July, October, and December. Very nice reporting features in QuickBooks, in the desktop and the online version. So if you have not watched the desktop version, say you got a hold of this version instead, you would find that the tools work very similar. People talk about the online version and the desktop version being different. They are not that different. They are more same than they are different. The challenge is visual. So we are very, very visual learners. At one time, this front entry screen was pretty empty, right? When it first came out 5, 6, 7 years ago. But now that we've learned to use it, and we've learned to navigate, we know that there's columns on the left. Thank you very much. A lot of messages. There's this button up here on the top left. And then there's this wheel, this cog, that also has some tools and features that you'll become familiar with as our sessions go on. So again, the expenses. When I go to expenses and I look at vendors, I can see my vendor list. I have a payables report that is right here that shows me everything that I owe. The bills hang out there until I pay them, and I can pay by cash, check, credit card, right? Let's talk about a couple of specialty type of expenses. And it's ones that always kind of make life complicated in accounting. But let's say that we had the company that we owed our rent to. It was, let's see here, Properties. So this Hall Properties, let's say that we sent them a check. Okay, so we have a check and we're going to send them a check, and it's Hall Properties, and it's being made today, and it can be whatever the sequential check number, and all the softwares have sequential check numbering and sequential numbering for receipts and invoices, always sequential, which is nice. If you step outside of that sequence, say like you miss a check or you go backwards, just fix it, and then you will have to nudge it a little bit and help it to move forward where you'd like it to be. So rent, let's say we made a $12,000 rent payment. And I'm just going to save and close this. And of course, we know now that when we have our reports are right here, our profit and loss report, and this report is for the year, I would see that expense showing here for the entire year. And of course, if we just looked at December, that rent was just for this month. And it really throws my profit and loss out of whack. It's really not a good representation of what's happened. My lease is not $12,000 a month. It's $12,000 for the whole year, or maybe it's $14,000 for the whole year, and the landlord has now given me a discount if I pay in advance, right? Those things happen. So we would take that and we find that transaction. And again, I'm just using the click the link, and I find this, and I'd like to post it not on my profit and loss report, but I'd like to put it onto my balance sheet. And so when you prepay an expense, we actually create an account. Let me roll through here and see if Craig has one already. And he does. It's called prepaid expenses. Some people prepay insurance, some people prepay their rent. Some of you have other prepays, And what you'll do is have a separate account for each one of them. Some people just throw them all into one. So this is prepaid and this is rent for 2021. And it's going to be $12,000. That amount of money, that expense, no longer shows up on this year's profit and loss. It shows up on my balance sheet, and it's an asset, and it's an asset. Let's see where it went to. Let's run it. Let's update it a little bit. There we go. And so the prepaid expenses are $12,000. Waiting then so that each month next year, I can say that there's 1,000 for January, 1,000 for February, 1,000 for March, and so on. And we would do that with a journal entry. So another type of payment that I'd like to show you is when we purchase equipment, something large. Let's say that we're going to purchase a John Deere tractor company, right? And it's going, the money's going to come out of my checking account. We have to add it. We added it on the fly. And of course, I would have done a full setup. And the category, though, sometimes people say that it's my new tractor or my John Deere tractor, or it gives some sort of identifying characteristic. I set it up. And if I set it up as an expense and say that this is some sort of equipment, it's not rental, is it? Let's say that people get confused a little bit, and it's a John Deere tractor, save and close, and I had a $5,000 deposit for that tractor that's going to be coming in a few days. When I actually, and it says that my number is already there. Do you want to save? We will for today. And as we know that this sample company would roll right off the minute I close it. So in this situation, again, my John Deere tractor is going to show up. I would update my report. Tractor John Deere 5,000. Well, again, that's not quite right because that tractor is not an operating expense. So your profit and loss report is saved, is designated for the operations, your costs, your income, things of how your company actually makes money. Show me how you're making money in this business. That's what the profit and loss, or we sometimes call it an income statement, is created for. So that also needs to be an asset in my balance sheet account. And so I can actually recreate that as an asset, or I can come down to my chart of accounts. And in my chart of accounts, I'd like to see the full chart of accounts. And I come to my expenses, which are John Deere tractor, and I edit this. And lo and behold, I have the capabilities of making this an asset account. And it's a fixed asset. It's actually going to hang out with us for quite a while, hopefully, right? If anytime I buy a big piece of equipment like that. And so tools and equipment, and it's our John Deere tractor, save and close. And it says it will affect your reporting. Are you sure? And it's like, yes, I really do want to do that because I really want that to show up. Let's see if we have run our report. We'll update just a minute. There's our John Deere tractor for 5,000. Now, as we well know, that was just a little bit of deposit. My full amount is going to be larger than that. And in addition, I will probably have a loan to go with it. So in that case, I would finish this full transaction, the next half of this transaction, by creating a journal entry. And some of you are a little nervous about journal entries, and I always suggest that you try it and you'll say, okay, I know that I'm going to have the loan for the tractor. And if you have a lot of equipment and vehicles, you would have identifying numbers, especially if you have a fleet. So Ford number 1, Ford number 2, Ford number 3, Ford number 4, those don't really work in the real world, right? We want to be able to identify them so that we can track which ones are purchased and which ones are sold or disposed of. So this is, in this example, we're going to say that this is a long-term loan and it's a note payable, loan for John Deere tractor, save and close. And let's say that it's going to be $45,000. And then I have my credit here and I say, this is the balance of the loan when the John Deere tractor comes tomorrow. And I save and close. Now, those of you who are familiar with accounting, you're already going, Marie, stop, whoa, 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 whoa. I know that we put the debits and the credits in the wrong place, right? Because what I wanted to show you is that if you're not familiar with journal entries, and sometimes people get really wound up over journal entries, right? They're like, oh, debits, credits, let's stand on their head, chew gums, pat their tongue. Try one and tell me what happens. So is this John Deere tractor worth a negative 40,000? So trying to read this balance sheet, we'd say, no, that doesn't really make sense. Or if I scroll down and look at the loan for the John Deere tractor, that liability is negative. No, as I can see what's correctly indicated, a loan would have a positive balance in this case, right? I would be able to read my report. I owe 25 grand. I owe 45 grand. Obviously, I've popped that in there incorrectly. And I know that as accounting professionals work in your records and your books, and you learn more about debits and credits and how things line up, you want to know the whys and the hows and why debits and credits work. And I'm glad to share those with you. In the meantime, you have two choices, right? You can make a debit or you can make a credit. You update these reports and look at, there's my loan is now $45,000. And here's my asset. I should have a tractor that has now been increased as the 5,000 plus the 50. So that was one of the other ways that we spend Larry's money, or Craig's money, right? Larry was in the desktop version. We did some of this in the desktop version as well. And so another payment that we would be making, we'll just use an expense. And this is going to be the John Deere Tractor Company. I should now have in my list. And we will, grab right there. I'm going to pay this, and it's going to come out of my checking, but it's actually more of a, I'm going to add a new method. It's a EFT, electronic funds transfer, right? It just comes right out of your checking account, and it's monthly, and we're going to pay on that loan. So the loan for the John Deere tractor, let's say that this is my monthly payment, and I pay $800 a month. And if I process that, it would subtract $800 from that loan. Our challenge is these loans are never for $800 principal. There's two parts. There's the principal part, and then there's the interest expense. So yes, we want to reduce the actual principal portion. And in addition, we're going to have a split interest. Let's see if Craig has, he doesn't have an interest expense account. Did I spell it correctly? Yes, so we're going to add that in its expense. It is interest paid, save and close. Thank you very much. And this is our monthly payment again. Our interest in this case, and you can see that my amounts are recalculating automatically. I don't have to click anything to get them to recalculate. They do have to be in balance before I can save and close. but 100 for the principal payment to start with, and the interest is 700. And as we know, in an amortization schedule, that interest decreases every month and the principal portion increases. So we would save and close. We can also make this reoccurring, which is a nice feature in both of the software versions, actually all the software versions. But let's say that we're going to know that this comes out every single month, and we're going to create it 2 days in advance. It's going to come out of the checking, and it's paid monthly on, I don't know, whatever day we set it up, 16th, and we will start it on since we've made December's payment. And then our end, if we're buying a John Deere tractor and making payments of very little, it'll be a long time, but we would know when our end date is, and we would plug that in, right? It'd probably be in 2025, 2027, 2028. But literally every month now, this recurring expense is saved and ready to actually be posted for me. The challenge I have is that next month, that same transaction with the same interest and the same, you see that I'm actually looking for recurring transactions right there. But this John Deere tractor, each month, it will post exactly like that. And this is okay, because what happens is the next month when it's in my books, it's in my QuickBooks, I pop in here and I say, oh, well, you know what? In the big scheme of things, that was 125, and this happens to be 675, right? And because the payment's still 800, so we can adjust just that little bit. We could use it. In this case, I don't need to edit the template every month. I just need to edit the transaction that comes in, right? So I might leave this template exactly the same and not change it. Just edit when it does show up. The other thing that I can do is use it. And let's say we're in the following month, I can change it at that point in time so that each time it's being used, I adjust it to be reflected accurately. Now, sometimes I don't have a breakout of the principal portion and the interest portion. So some people ask me, well, what happens if I don't know? Then I would just make that $800 posted to the principal portion. You might estimate the interest. Most companies will give you an amortization schedule so you can come pretty close. If you can't, at the end of the year, there should be a statement that shows what your balance on the loan is. And we have a balance sheet, right? And so if we have a balance sheet, let's see where my balance sheet went to. It looks like I've been going through some, flipping back and forth through some browser windows. There's my asset. Then the asset, just so you know, this asset is never going to change, right? So what happened here is this 45 and the 50 made my total cost of that tractor. It's always going to stay at that total cost. A loan payment doesn't change that value. Depreciation will, and we'll talk about depreciation at another time. It's a non-paper type of expense. And so the loan, though, you can see has decreased. And at the end of the year, when I look at this, I can make sure that if I receive a statement with a true balance, and I look at my balance in QuickBooks, I can adjust just a little bit for the interest difference to make it spot on and make it correct for the tax prep. And it's important because that interest expense will probably be deductible for you on your profit and loss report, right? If you're running a business. And of course, most of us are running a business and we're using those profit and loss reports. So if I come here again to my profit and loss reports, and this is for the year to date, I can actually see that I have some interest expense. And when I click on that interest expense, it is indeed to that John Deere tractor company. And that was interest that was recorded. And if there's a little adjustment, it would also land in the same place. These expenses are deducted from my income, thus leaving me with a net. And Craig still has lost a little bit of money. And as we read those, I would think that he'd come and say, Marie, you've spent enough of my money. You've been spending money. You've been spending money on my job costs. You've been spending money on my expenses. And in the big scheme of things, it's time to say thank you. And I'll see you in our next module.